It's time for that inevitable question that I get to field every day. Let me consult my crystal ball. Where is the real estate market heading? Record-setting prices, a never-ending pandemic, rising interest rates, forbearance issues, and a potential market crash? Today, we're going to go deep into all of these factors. I'm Keith with the Walker team of Intero Real Estate, back this week to share the much anticipated answer for homeowners and future home buyers alike. But first, let's start with all of the baited headlines we'll see. Just the other day I saw U.S. home sales plunge. Of course, if you read the article, it goes on to discuss how sales have gone down because inventory's at a record low and there just aren't enough homes to buy. Don't stop at the headlines. So, while we can't actually predict the future, what I've come to learn in my experience is that we can project it.
Now you can open them. We'll gaze into the crystal. What's this I see? A house with a picket fence.
There are four big factors while discussing the real estate market. Number one, inventory. Number two, buyer demand. Number three, interest rates. And number four, the economy. The past 18 months have been full of record-breaking moments. Let's add some perspective though. We live in an inflation economy, which means that prices will always rise. Just look back at each decade for the past 100 years. Which means, more likely than not, we will always see new records. More headline fodder. My father was also a realtor, and I remember back when he told me the first home in Cupertino sold for $100,000, and there was complete panic throughout the community. This can't be real. We'll never sustain this. And now, that home's worth $3 million, and it'll eventually be worth $6 million. So, why is inventory always going to be complicated in Silicon Valley? If we look at historic trends, our population keeps growing at an exponential rate, and this is an interesting fact, the majority of people in the nation prefer to live near water. Also, we just happen to be the tech center of the world, and tech is only growing. Plus, there is a massive and unprecedented surge of millennial buyers. See my previous video on that. Not to mention that land is so very, very limited in our area. And by the way, the weather's pretty darn good.
Sunshine, lollipops, and rainbows, everything that's wonderful is what I feel.
Also, due to the rise in single-family homes, condos and townhomes are finally gaining pandemic timeframe steam in both Santa Clara and San Mateo counties. So this year, we should see some relief in inventory as more sellers are comfortable putting their homes on the market. Think previous pandemic factors, Prop 19, and appreciation in equity, which will take a slight edge off the crisis. It doesn't necessarily mean prices will fall or become more affordable. It just means that there should be more options. Buyer fatigue will be running high. I have a video on that if you need more info, which will potentially lead to a reduction in competition for offers. Of course, we've recently seen 30 to 70 offers on homes. But what I've seen in my experience with the buyers that decide to sit on the sidelines when the market gets hot, well, they're still renting, and they've essentially lost equity. The key is always to just get in and ride the inevitable wave. Time to dive into mortgage rates, the hottest topic right now. In case you didn't know, in 2021, we saw the lowest interest rates ever in our history. So if you're waiting for the rates to go down, you're going to be waiting for a long time. Rates will go up. But understand, while homes will be less affordable, they will still be extremely affordable historically. Take a look at these interest rates over the past 4 decades. How about that economy? If you follow the economy at all, first know that with all the multiple hurdles of the pandemic, the government is going to do all that it can to keep the economy strong. Additionally, with the stock market rise, many investors pull that money out and place it into the real estate market. Think inflation. Let's touch on the forbearance topic. So many people are waiting for these foreclosures to hit the market because of the pandemic. But like the idea of lowering interest rates, they will keep waiting. You see, the vast majority of people that opted out of mortgage payments have already rectified their situation, and the remainder of people have gained enough equity that they can sell their home and put money in their pocket. Unlike the 2008 crisis. This will be a non-existent factor, especially in our area. And regarding the crazy appreciation of 2021, if you weren't aware, that was a correction. With the market being paused for 4 months at the peak of 2020, we actually ended up experiencing 2 years of appreciation in 2021, making up for the missed time. Of course, this current rate of appreciation can't and won't be sustainable forever. Let's talk about what the national experts have to say. In speculation of another market crash, 100 industry experts say, nope, not going to happen. They all agree that inventory should improve, thereby slowing price appreciation in most areas. A few weeks ago, the national experts predicted an average of 5.2 appreciation across the nation this year. They've since adjusted to 5.7%. The bottom line, it's going to be another good year for homeowners. While 2022 shouldn't be as completely crazy as the past 18 months, understand it's still going to be important to stay on top of my latest insights moving forward. Thanks again for watching. I'm Keith with the Walker team of Intero, and as you know, I'm here to educate and navigate, not speculate and fabricate. Be sure to watch my 2021 predictions and see how they ended up. Take care.